So for those of you that don't know, every Monday we put out the top tier market outlook, usually top 3 stories of the week, and then we get into the watch lists and we get into what is likely going to be in play. We've been emphasizing healthcare for a long time as one to stay away from, right? But we've also then been saying, hey, where do we want to focus? And that's the financials, right? That's the financials. And by looking at what we have in terms of financials, right, that's kind of where we continue to be. And by the way, if you look at the trades that we've put on, whether in the Sector Secrets Mastery or even when I'm day trading in the Simpler Futures room, a lot of what we've been doing has been focusing on the fact that financials and KRE have been in fuego, right? So we talked about KRE as well. So this newsletter helps us focus on where to look, right? If we get our watch list right, trading becomes really easy. So we spend a lot of time on the watch list. So here we come to the XLV, the one that I just mentioned, right? And the reason that the YM futures continue to struggle versus, say, the NASDAQ, right? You look at YM versus NQ, a lot of the reason for that is XLV, right? So looking for XLV is going to be futile until certain stocks get above their 200 period exponential moving average. Now, you know, here we use the fast exponential moving average of the 8 and the slower exponential moving average of the 200, and that's what gives us our propulsion dots, right? But it's still really largely based on where the 200 exponential is. So in order to see better participation in the key sectors, we're not talking about market breadth, gang. We're talking about very specific sectors that are heavily weighted within the S&P futures, NASDAQ futures, Dow futures, Russell futures, starting to all move together. So it's an exclusive club, gang. The sectors that we watch is an exclusive club. And the ones that continue to outperform are these names. And that's where I would say when we're building a watch list, right, that's where we want to be. But, of course, if and when Johnson & Johnson and United Health can get with the program, well, let's take a look. So here's the XLV. The reason Johnson & Johnson are so important is UNH is the number 1 weighted name, right? And Johnson & Johnson is the number 2 weighted name. And the reason I said, hey, let's keep an eye on the 200, which is absolutely in play in UNH, this actually bodes very, very well for XLV. And so notice the time frame that we're focused on is the daily. The 200 on the daily time frame is extremely powerful. I'd say second to that would be the 200 exponential on the weekly. We call this the equator because if we're above it, we're in the bullish hemisphere. If we're below it, we're in the bearish hemisphere. Ideally, we come back and test the area around 490 so it shows us that the bulls are willing to step in. And this actually, for the first time in a long time, means that the 3 cylinders of the Dow and the 3 cylinders of the S&P look about as bullish as they've looked in a really long time, which means the market breadth that matters, right? Maybe that should be the whole kind of idea behind this. The market breadth that matters are the specific sectors in the indices and those heavily weighted stocks in those sectors. And I'm specifically measuring these on the daily time frame. So that means buy the dip, which we've been talking about now for a long time, only starts to look better across more and more indices, more and more sectors. And that's exactly what we want to see. So these things are definitely in play. So if I want to take a look at Russell futures, what am I going to look at? KRE. This has been something we've been long in all day long. It's a monster day trade for us, right? But we know that as long as KRE is moving up, who's it going to take with it? It's going to take the Russell with it. This is why, even as a futures trader, we want to think about the next 2 tiers. The top tier is the index, right? Even above that, the very top tier is sort of the macro that's running these indices. Then we go from index to sector, sector to stock. When your watch list aligns in this manner, market breadth is a very specific group of names. Trends are far more easy to put into context, and your watch list builds itself, right? So that's the way we're looking at this. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.